Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities, the number one annuity podcast on the planet with me, your host, Stan the Annuity Man. Yeah, I've got logos on. You can see the logo on the hat, logos everywhere. I'm really glad you joined me. For the people that are listening to this podcast, you can also see the video version on the Fun with Annuities YouTube channel. And I have a couple of YouTube channels, but that's the one that handles the podcast. So you can go there. So for all the people watching on the cam, I call it the Annuity Fun Cam in the Will Do Not Might Do studios, which is what you're looking at here. All of the stuff behind me that muffles the sound because Stan the Annuity Man has a tendency to start yelling. I'm pretty intense about annuities. I do think that they can be fun because contractual guarantees can be fun. Lifetime income can be fun. I know that sounds crazy, but I really believe that annuities are lifestyle enhancers. Now, I am known as America's annuity agent. I'm licensed in all 50 states. That's including yours, the one you're sitting in. I do represent pretty much every single carrier out there. And my whole mantra is you own an annuity for what it will do, not what it might do. And the will do are the contractual guarantees. I never, ever, 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 ever focus on the might do. And what's the might do? It's the hypothetical, theoretical, backtested, projected, hopeful, agent, unicorn chasing the butterfly scenario. If the planets all align themselves, you're going to get this. If you owned it 10 years ago, you're going to get this. I never do that. And you should never do that. Annuities are contracts. They're not investments. They're contracts. So you buy them for the contractual guarantees. Kind of makes sense. So with that being said, I do encourage you to go to my site at theannuityman.com. You can run your own quotes. You can order my books. I've written 7 of them. I'll send them to you for free. You can schedule a call with me, which is very important because one-on-one, we'll have a 30-minute conversation that I'm going to answer all your questions, listen to you, and then put together a customized plan for your specific situation. Or I will tell you that you might not need an annuity. And that's okay too. Annuities are not for everyone. Okay, so with that being said, what are we talking about today? We're talking about annuity death benefits and the choices that they offer. Now, annuities. It's kind of the financial curse word of the financial business. And I've been with all the major firms, Morgan Stanley, Dean Witter, Payne Weber, UBS. I've done that, been there, done that. But in those worlds, annuities kind of are, I don't want to do an annuity. Annuities are bad. And a lot of people out there go, well, I'd never own an annuity, Stan, because if I die, the annuity company keeps the money. Why would I do that? Well, unfortunately, the annuity industry has done a horrific job of teaching people that that's only one way to structure a product, and a specific annuitized product like a qualified longevity annuity contract, immediate annuity, or deferred income annuity. You can have what's called life only. Life only means when your Learjet hits the mountain, money goes poof, and the evil annuity company keeps the money, but you do not have to structure it that way. You can structure your lifetime income payment so that 100% of any unused money goes to the beneficiary and the evil annuity company never keeps a penny. Are we clear on that? Are we? Please nod your head because I have so many people call me and they're under the misconception. I guess their advisors tell them or whatever, they see an ad, well, don't buy an annuity because the insurance company keeps the money. That's only one way of if you want to go through, it's probably 40 ways to structure and customize an annuity payout for lifetime income. That's one. For whatever reason, the annuity industry has been pigeonholed to that. So when we talk about death benefit, I have a good friend in the life insurance business, and I do not sell life insurance. I have a ton of life insurance on me because, when Stan, the annuity man's allergic hits the mountain, my family is going to be taken care of. Life insurance, from a death benefit standpoint, life insurance is still the best death benefit strategy on the planet, and I do not sell it, okay? I have a lot on myself, but I'm Stan the annuity man, not Stan the life insurance man, all right? Maybe in another life, but I don't think so. Stan the Annuity Man only works with fixed annuities. But life insurance is the best product on the planet for what I call legacy. There's 4 things that you solve for with an annuity. There's acronym is PIL. P stands for principal protection, I stands for income for life, L stands for legacy, and then the other L is for long-term care, confinement care. So in looking at it from that standpoint, okay, the L is the legacy. That's what we're talking about today. Now, there's a little bit of confusion because a lot of people say, well, Stan, life insurance companies issue annuities, which is true, but the death benefit on annuities is not tax-free, but life insurance is tax-free to the beneficiaries. Exactly. That is true. So let's go through that again slowly. When you die, the life insurance death benefit to your beneficiaries goes tax-free lump sum. It's beautiful. It's the best return on investment you're never going to see because you're dead. But annuities, okay, you don't have to go through any underwriting process. With the vast majority of them, they're guaranteed issue, but the death benefit is taxable. As I tell a lot of my clients, well, who cares? You're dead. So that's one of the big keys is life insurance is underwritten, and annuities are not underwritten. They're guaranteed issue. And then life insurance is tax-free to the beneficiaries, and annuities are taxable. The benefits are death benefits are taxable to the beneficiaries. So that doesn't mean one's better than the other. I will say this, even though I don't sell life insurance, but I'm a big believer in it personally. I have tons on myself. If you can qualify for life insurance, then buy life insurance. But don't get sucked into all these. There's a lot of different life insurance type products out there, and a lot of them have high fees. A lot of them are based upon indexes and this and that. My opinion, and I know what I'm talking about here, if you're going to buy life insurance, buy level term, meaning that the premium's not going to change over that term that you choose in like a 30-year level term. So, and it's really an efficient way to buy as much death benefit for as little amount of money possible. And I take the same approach with annuities. I say, okay, let's solve for the contractual guarantee using as little amount of money as we possibly can. So, that goes for death benefits as well. People call up and say, Stan, I'm drinking 12 glasses of scotch every day and smoking 2 packs of cigarettes. You're probably not going to qualify for life insurance. And that's not a bad thing, but you can qualify for, a death benefit type strategy with an annuity. Is it better than life insurance? Probably not, but it's all you got. You're drinking the scotch and you're smoking the cigarettes every day, which doesn't make you a bad person, but it is what it is. So, once again, remember that annuities, from a death benefit standpoint, they're customizable. A lot of the annuitization type products are. We're going to go through each type of annuity and the death benefits involved, just to kind of give you a brief overview of all of that. So you'll have a good foundation before you give me a call or you schedule a call for me and you to go over everything. Now, when we talk, I'm going to run quotes with all carriers that offer death benefits for the best death benefit for you. And remember, fixed annuities are regulated at the state level, not the federal level. So each state is different. So it's going to be, what's approved in your state. I'm licensed in all 50 states, so I can do that. So let's cover some of the common death benefit choices. I'm going to cover these again at the end of the podcast, but let's kind of go over them and annuities in general. Okay, and there's just a few. Number one, you can take the lump sum. So the benefit, you own the policy, you have beneficiaries. The beneficiaries can take the lump sum, okay? They also can choose, instead of taking the lump sum, to take a 5-year payout on that lump sum, meaning that they're going to kind of stretch out the tax liability. With some policies, not all, but with some policies, and we're talking primarily the deferred type of annuities, your beneficiaries can choose to take the death benefit over their lifetime. All right, they can do that. Just recently, legislation has come through, Secure Retirement Act, that said with IRAs, the beneficiaries can stretch that over a 10-year time period. Used to be they could do it over life, but it's over a 10-year time period. So let's kind of go over that again. The one that I did leave out that's very important, if you are a spouse and a beneficiary, so in other words, if the husband owns the policy and the spouse is the beneficiary, the spouse can continue the policy, So let's do them in order. That's the first one. So husband owns the policy or wife owns the policy, and the spouse is the beneficiary, and the husband dies, then the spouse can continue the policy. The second way is they can just take the lump sum. Third way is they can take those payments over a 5-year time period, that lump sum, and break it over 5 years. And then the next one is they could, with some policies, you can take a lifetime income stream. And then the last is inside of an IRA. If the annuity is inside of an IRA, then you can stretch out those payments up to 10 years. And those are, in essence, I think there's 5 primary choices there. That's pretty much it. But I would encourage you, if you're buying an annuity from me, Stan the Annuity Man, we need to talk about that, and we need to talk about the death benefit. If death benefit is the strategy that you're looking to achieve contractually, then I need to go shop all of those companies that offer that. Like, for instance, in the income rider deferred annuity, like an indexed annuity with an income rider that has a death benefit attached, currently at the time of this taping, I'd say there's less than 25 carriers that even offer that, but we're going to shop every single one of them for the highest contractual guarantee for your specific situation. So a couple things kind of going backwards. If you've listened to any of my podcasts or read any of my books, I would encourage you to get my books at my site. You can do that by just going to theannuityman.com, signing up. I'll ship them to you. But in my books, I go through the 2 things that I kind of strip down for people to see if they even need an annuity. Number 1 is that PIL acronym. P stands for principal protection, I stands for income for life, L stands for legacy, which is what we're talking about today, and the other L stands for long-term care. And then I ask 2 questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? Now, from those 2 little things, I can determine if you need an annuity at all, and sometimes you don't. And then if you do, then what type of annuity would provide the highest contractual guarantee. So with that being said, let's go over the types of annuities and some of the death benefits that you can structure with them. So let's go over the annuitization type products like single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts. These are the ones that in the South, I would say, you go to the outside water faucet and you rip the knob off the spigot, as they said back then, and then the water just flows, meaning the income's going to flow. These are irrevocable lifetime income stream contracts. You can also set them up to pay for a period certain as well if you want to. But in this case, let's talk about it from a legacy standpoint. With annuitization products, immediate annuities, deferred income annuities, which are immediate annuities that you defer, and qualified longevity annuity contracts, which are in essence deferred income annuities that you use in your IRA, you can structure it so that there can be whatever money goes unused will go to the beneficiary. Now remember, with all lifetime income streams, it's a combination of return of principal plus interest. So you're getting your money back with interest. The transfer of risk and the benefit proposition is if you draw that account down to 0, then the annuity company is on the hook to pay you for the rest of your life, regardless of how long you live, even if the account's at 0. I have thousands of clients where the account's at 0, they're still getting paid. That's the reason I always tell people there's no ROI until you die. Up until then, it's a transfer of risk. At your funeral, I can tell your family what the ROI is. In fact, I can come to your funeral and sing that in kind of a song format. It's called the ROI. No, forget that. Long story short, it's a transfer risk because people always say, well, what's the return on investment, Stan? I don't know that, Chester, until you die. With these type of products. Okay, so with annuitization products, you can set it up, say, life with cash refund. What's that mean? It means it's going to pay you for the rest of your life, regardless of how long you live. But when you die, whatever's left in the account goes lump sum to the beneficiaries. Let's do joint life with installment refund. What's that mean? That means it's going to pay for you and your spouse's life, regardless of how long you live. But the installment refund means that when you die, when the second spouse dies, whatever money is left in the account will be paid in payment form, same payment until the money's exhausted. So you can choose cash refund or installment refund. Installment refund is going to have a higher lifetime income guarantee because the annuity company doesn't have to come up with all of that money lump sum. The other ways you can do it is what's called a period certain. You can say, I want a life with 20-year period certain, or life with 30-year period certain, or life with 10-year certain. What that means is it's going to pay you for life. You can set up joint, you can pay for both lives. But at a minimum, there's going to be 20 or 10 or 30 years of payments, whatever you say. So let's take an example. Life with 20 years certain. What does that mean? It's going to pay you for life, but let's just say you died year 2, there's 18 more years of payments. If you died year 5, there's 15 more years of payments. So you understand what I'm talking about. You can structure these exactly how you want. One of the reasons that I'm the top agent in the country is I know how to structure these things to your benefit and how to maximize and squeeze every contractual penny out of that policy, even though you're on a lifetime income guarantee and you've transferred that risk. So just to understand, with the annuitized products like immediate annuities, deferred income annuities, qualified longevity annuity contracts, you can structure the death benefit part how you want to leave the money, and you can customize that. You can say, you know what, Stan, I want a joint life, me and the spouse, in an 18-year period certain. Okay, what does that mean? That means both you're going to get paid for the rest of your life. When the second spouse dies, if they die at, say, year 13, there's 5 more years of payments because there's 18 minimum payments guaranteed, even though they're guaranteed for life. So just remember, with the annuitized products, you can structure the death benefit how you want to structure it, but it doesn't have to be life only. People think that that's the only choice. It's not. There's 35, 40 choices, and that's something that we need to talk about. Let's talk about the next type of annuity. It's a multi-year guarantee annuity. It's a CD type annuity. If you think of a CD, you put money with the bank, and then they pay an interest rate every year, and at the end of the term, you get all your money back with interest. That's a multi-year guarantee annuity. That's a fixed rate annuity. Now, the death benefits on fixed rate annuities, multi-year guarantee annuities, they can be different, varying from company to company. Some companies offer a very high interest rate, but if you want to put a death benefit, if you die early in the contract, that will lessen the yield. Some companies will just pay you the yield, and if you die, you get the principal plus the accrued interest, etc., just like you would a CD. Bottom line is, if you go to my site at theannuityman.com, there's a live feed of these MIGA rates, the best fixed rates, and if you see one you like and death benefit's important, then contact me. Set a time with me, and we'll talk about how the death benefit works, because with multi-year guarantee annuities, they don't all work the same. Some work just like you think they should work, which is, if I die, I get the principal plus whatever accrued interest, bingo, bango, bongo, you get it back, right? And then some have a little, moving parts where, if you want a death benefit, you have to pay, say, a 50 basis points rider to have that death benefit in case you die before the surrender charge period. So understand, with multi-year guarantee annuities, it's the shortest duration is around 2 years, and the longest we allow people right now to go is around 7. We really like for you to stay between that 2 and 5 year time period. But death benefits, it's a principal protection product, but the death benefits vary between the multi-year guarantee annuities. But the bottom line is, however you want it to work, we can find that product for you, because we represent every single carrier, and we'll find the highest contractual guarantee. So let's go to the next one, which is indexed annuities. Indexed annuities are really complicated. They shouldn't be, but they're sold as market upside with no downside. That's not true. They're fixed products. They're CD type products. But the death benefit, if you bought an indexed annuity without an income rider, the death benefit is that accumulation value, that index option strategy, which is a CD strategy. Index annuities were put on the planet in 1995 to compete with CD returns. That's exactly what they do, okay? But if it's just the accumulation value, it's going to be whatever that index option gain is. Remember, with index annuities, that gain is locked in contract anniversary date, depending on the type of index annuity you have. Most are lock in every year, some lock in every 2 years, but most lock in every year. But with index annuities, you can also attach what's called an income rider, and an income rider is an attached benefit for lifetime income at a future date that you choose. But some income riders, less than 25 right now in the country, offer a death benefit as well. So instead of taking income, you can let it grow for death benefit. Let me do a visual. Draw a line down a blank sheet of paper. Stay with me here. Accumulation value on this side, and then the income rider on this side. And for the people listening, left-hand side is the accumulation value, and right-hand side is the income rider side. I just drew a line down a blank sheet of paper. The right-hand side is that income rider side. It also can be a death benefit side, and it grows by a specific percentage. And that's a very efficient way for people that can't get life insurance and can't qualify for the underwriting to get a death benefit that's guaranteed. So in other words, if you said, Stan, I really don't need the money. I want to leave the money as a death benefit to my beneficiaries, and I can't qualify for life insurance. we can shop these companies and I can tell you what that death benefit will be 7, 10, 15 years down the road, which is, I think, is great. And the same thing applies with variable annuity death benefits. I don't sell variable annuities because I don't sell anything that has the potential to go down. I only sell fixed. But variable annuities can have those riders on them as well that have the death benefit attached to them. So those are the kind of the primary annuity types. For you looking out for death benefits, it's either going to come down to the annuitization products, which is immediate annuities, deferred income annuities, qualified longevity annuity contracts. Then you have your deferred annuities, like multi-year guarantee annuities, fixed index annuities, variable annuities. But understand that income riders can be attached to typically variable and index annuities, and they can provide that death benefit. That's a guaranteed issue death benefit. Now, your beneficiaries have to pay taxes on that money, but if you can't qualify for life insurance, it's not a bad deal. So let's talk about the beneficiary setup again. With benefit at the time of application, let's just say you went through the process with me. We talked, we ran quotes, we went over everything. I sent you my books, you watched the videos, you listened to the podcast. You're very educated on what you bought. You can explain it to me, you can explain it to your family, which is, by the way, what you have to do. I need to understand that you fully know what you're buying. But during the application process, you can list the beneficiaries. You can list a primary beneficiary and then a secondary beneficiary, et cetera. And those can be changed. You can, it's not an irrevocable choice. You can, if someone makes you mad and pisses you off, no, excuse my French, you can remove them as the beneficiary. I see that happening all the time. But you can also, as the beneficiary, you can list a trust as the beneficiary. You can list a charity as the beneficiary. Remember, annuities are contracts, so it's up to you how you want to structure it. So you could have, you could have the wife. Let's just say it's you, Chester, out there. I'll call everybody Chester, but it's you out there that has the annuity, and the wife is 100% primary beneficiary, which means she can take over the policy or she can take the lump sum. And then the kids, let's just say you have 2 kids, they could be secondary beneficiaries, split 50-50. So if something happens to the wife, then they move up in rank in the beneficiary. So, understand that you can control the beneficiaries. You can make sure that you can have the money going exactly how you want it to go. You can have the trust get the money, and then the money get dispersed the way you want to. But what I want you to understand when you're looking for death benefits through annuities is it's customizable. I encourage you to schedule a call with me. Let's talk. I do not pitch, and I will never call you unless you schedule a call. I'm never just going to pick up the phone and go, hey, you've been thinking about that? No, I'm not going to do that. I'm going to treat you like a professional. So there should be no hesitation for us to have that consultation and conversation so that you can understand if an annuity is right for you. And I'll respect whatever decision you have. You got to make the decision on your terms and your time frame. There's no urgency to buy an annuity. So, conclusion about annuity death benefits. Remember just kind of the choices. Number one, if you're a spouse, you can take it over the policy. If you're a beneficiary, you can take over the policy. So if Jim has the policy and Janet's the beneficiary and Jim dies, Janet can take over the policy. The other one is beneficiaries can take instead of the lump, they can take the lump sum if they want to. They can also have that lump sum be paid out over a 5-year time period. Okay, or with some policies, instead of taking the lump sum or the 5-year payout, some policies will allow you to take that death benefit paid out over your life. And then if the annuity is inside of an IRA, you can stretch those payments out to a maximum of 10 years on recent legislation changes that just happened. I think it was a Secure Retirement Act. So with all of that, I know I've thrown a lot at you, and that's okay, because death is a tough one to talk about. I know that the COVID thing has really made me and my family think about it a little bit. I've had some people get it. I've had a couple of people I know pass away. I think it's made us all think a little bit more about our life expectancy and just kind of what we're doing and how we're planning. I know it has for me, and I talk to my clients all the time about, hey, let's plan a little bit more because there's no U-Hauls behind hearses. As my good friend in the life insurance business, he just sells life insurance, and he goes, 1 out of 1 of us is going to die. And I'm like, man, are you a motivational speaker? But he's right. And, there's just no perfect answers to this. What you need to do is, you can't really have your cake and eat it too. You can get a lifetime income stream. It'll pay you for life, and it's going to draw down the account. But you can make sure that whatever unused money will go to your list of beneficiaries of the policy. If you don't want lifetime income and you just want a death benefit, then you can buy what's called an income rider that has a death benefit attachment in addition to the income guarantee, and you can just have that grow and use that as a death benefit. The bottom line is, you need to schedule a call with me. Can annuities be fun? Yeah. Can contractual guarantees be fun? Yeah. Can death be fun? No. But, with the contractual guarantees of annuities, we can make sure that it is as enjoyable for your beneficiaries as humanly possible, if that's a way to put it. But, I hope this helps. I hope that, I've clarified some things for you on the annuities. I hope that you remember that annuities are customizable from the standpoint of how you structure them and death benefit and all that stuff. And I hope that I've encouraged you to schedule a time to talk with me because, having that one-on-one conversation, me listening to your specific situation, and having been to those rodeos before, I've been doing this for decades. And I am the top agent out here for a reason because I use my mouth and ears in proportion 2 to 1. I'm going to listen to you. And I'm going to put together a customized plan for you or tell you don't need one. So, I appreciate you joining me. Fun with annuities. Don't forget that. We're going to try to put these podcasts out every single week. Hopefully, if we remain healthy and happy and things are going good for us, we're going to put them out every single week, and we're going to cover these types of topics. I do encourage you to go to my site at theannuityman.com. There's all things. There's these podcast replays. There's videos, there's all kinds of stuff that will educate you. I'll send you my books, and of course, you can schedule a call with me. But I think that's about it. I appreciate you joining me, and I hope to see you again and interact with you again on the next Fun with Annuities podcast. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com. where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MIGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.